Why doesn't everyone just invest below intrinsic value? Even in the short 2 years since this channel was started, what counts as intrinsic value has been evolving. And so as value investors ourselves, let's check in on the last 3 videos from the 2024 season. Let's dive in so that your wisdom can blossom.
This video is intended for educational purposes. Opinions made by me or the Sage Seeds AI are not investment advice.
The story for Verisign, Berkshire Hathaway's over 10% position at the start of the year, which is now being massively distributed since exactly the top. Right here, July 28th, there was an announcement that Berkshire Hathaway had contracted some pretty large investment banks. Since then, we've been watching the share price react, effectively sieged by scalping traders, lower highs, higher lows, pushing the price into a thinner and thinner range. However, in just the last few days, it is October 2025 and the overall markets are basically consolidating. But unfortunately, Verisign has very much dipped below and is now making a pretty serious advance towards its 200-day simple moving average. What that likely means to me, a long-term analyst of the stock, is that at some point in late September, Berkshire Hathaway must have stopped unwinding its large position. From July to September is 2 months, and that would be a fairly typical window of time for the distribution to occur. Now, you can actually see that according to the volume bars, it was specifically on October 2nd that the elevated volume since the offering announcement actually disappeared. There's been noticeably less volume in the month of October, and that would also coincide with how investment banks typically manage these sorts of large block trades. I mean, guys, we're talking about traders at the investment bank handling this, being told to sell Verisign in September, and then not given instructions in October. Therefore, the moment October 1st arrives, they stop providing liquidity. And I actually think it's most likely that this red is nothing more than the investment banks flipping the scalpers on their heads. I mean, lots of people over just the last 2 months got very comfortable scalping this, day trading this. This looks to me like all the stubborn scalpers just getting taken for a wash right now. Now, on this channel, with the help of our Sage Seeds AI, we have a luxurious breadth of undervalued stocks to choose to invest in at any given time. And since it has now been 3 months since Verisign was posted on the channel, this is the last journal video that is going to feature Verisign. And as a proper journal should, I'm going to review exactly when I purchased and exactly when I sold, if I did sell at this point. I actually, over the last several months, had 2 distinct positions in Verisign. My very first position was June 16th. I added to it again on June 17th, the very next day, and then a third time on June 26th. So by the time we ended June, I had essentially established a relatively large foothold for myself. It was on July 23rd that I bought my 4th line in this stock. This was the peak size of my holdings. That beautiful earnings announcement happened. The stock shoots up. Honestly, guys, you can look back at the journal from August. I was so happy. And then Berkshire makes its announcement and I end up selling on July 29th for a very tiny win. Not anything like what I had hoped it to be. I still am feeling really angry at this, guys, to be completely honest with you. Despite my personal reservations, I then did a second distinct trade, started on September 18th. Which would have been right around here. We were toying with the first decent level consolidation. I was thinking this could actually be a consolidation before a run-up, but by September 22nd, it became clear that this was not going to be a run-up, so I exited at a small loss. Overall, I made a tiny bit of money on this. Not anything more than like an R. A lot of emotional energy spent on this stock, to be honest. Maybe my most emotional trade of the year so far, but not really profitable for the bottom line, but that is what it is. Still really fun for me to be involved in a technology stock at all. Of course, we look at undervalued technology stocks, but especially lately, there's been relatively few US technology stocks that make it onto our radar. Next up, we have Rolls-Royce Holdings. My preferred way to invest in this British Canary Wharf darling is actually the pink sheet offering in the New York Stock Exchange. The ticker is RYCEY. I like it because there are several hedge funds that actually just straight up refuse to invest in the London Stock Exchange. They have less of a problem buying pink sheets, believe it or not, as long as those pink sheets are available in New York. So liquidity is relatively better in RYCEY, I would argue. But the deeper reason, and I'll be honest with you guys, is the AI has been noticing that the US dollar has been weakening. And since Rolls-Royce actually has its price in British pounds, but this pink sheet version of Rolls-Royce is pegged with US dollars, well, I'll leave it to you guys to figure out if that is a reasonable additional risk. I'm not just comfortable with the currency risk over the last couple of months. I've actually been eagerly slopping up that currency risk. I've been enjoying that currency risk. However, the story with Rolls-Royce is it's teetering on the edge of being a fully recognized blue chip stock. Since February of 2025, like right at the beginning of this graph, multiple banks have been issuing buy alerts to their clients, have been starting to talk about Rolls-Royce with a lot of respect. It took several years, but this is actually a legitimate hot stock, as you can kind of see by this beautiful graph. I would argue this is an accumulation phase stock. And at the end of September, we had the largest spike in volume that this stock has ever seen ever. I mean, I haven't gone back through the full 40-year history or whatever, but certainly over the last 5-10 years, there has never been a volume spike like what there was at the end of September. Unfortunately, that led to me exiting my personal position. I am sorry to say. You will have to wait until the November journal to see the precise decisions I made in terms of buying and selling. The Rolls-Royce is actually the most popular video I've ever posted on this channel so far. Lots and lots of people interested in this stock coming to my channel to look at my take on this stock. So I'm not going to sell out and not tell you in the very first journal video, since I'm making a bit of an exception to reveal that information as early as possible, out of respect and appreciation for all the love you guys are showing that video. But so last month we talked about what is this pattern looking like when American hedge funds are accumulating and having to take those shares from British hedge funds. Well, this August period is exactly what that looks like. American funds aggressively bid the price up, then pull back immediately, forcing a couple of days of elevated volume where they do their real accumulation on the way down. Well, let's use that mental model to analyze the biggest volume days ever seen. These volume days actually happened not on the way down, but on the way up. And unfortunately, guys, that is not a good sign. There was actually a large volume day on the way up back in late May. And I would argue at the time there was one in early July as well. The one in July is particularly interesting because it led to a full-on ranging for almost the entire month of July. But luckily, we had very thin red days, and it really wasn't that scary. After this huge spike in volume, we had a very different story. We had price actually try to continue an immediate push, fail very obviously right at the end of September. And that was the first warning sign for me. I didn't immediately sell, but I had to start watching this like a hawk. This is not the only big red day there's been this year, but in my mind, it's the only big red day I've seen that wasn't clearly attached to an accumulation. So we start watching, and October has just been very different type of character for this stock. I think I even said a month ago that something like this was not likely to happen at all, but here we are. Someone must have watched the video, decided that if I'm posting about it on YouTube, the jig is up, the party is over, and they got to start reversing course. Now, I don't know the future. I'm not going to make predictions about the future, but the present right now is very much a consolidation instead of the clear upward trend that we have been seeing for who knows how long. Personally, that makes me very sad. Of course, Rolls-Royce is an absolutely amazing stock. We made a whole video on it, like we make a whole video deep dive on every stock we talk about on this channel. I think the market overall in October has begun jogging in place. Unfortunately, what jogging in place means like for such a popular accumulation stock is that British companies are undercutting the price, noticing the pause, and we might get a very ugly consolidation period, very, very volatile, not unlike what we saw at the end of March, beginning of April. Throughout the whole summer and most of the fall so far, American hedge funds have been firmly in control of the trajectory of this stock price. But I think what happened right here at the end of September is that the British have found their confidence again and are switching to being a lot more aggressive. Rolls-Royce is in the middle of a tug of war. If you understand and are comfortable with that volatility, please by all means go for it. Full transparency, in my case, I'm not quite comfortable enough with that volatility. I think there are less volatile, equally undervalued stocks I can look at instead. Many of those are in the financial space, as you've probably been noticing lately. And the first one I posted about is Bankwell Financial Group, a United States regional bank focused and concentrated in the state of Connecticut, a very unique and interesting state that I really think most people just never think about at all. Look at what's been going on this year. Now, the deep dive video has plenty of additional information and context, of course, but the story with Bankwell Financial Group is you could not imagine a better customer base and a better setup for extremely efficient banking. I think I pretty much demonstrated in that deep dive video that Bankwell Financial is literally at the legal maximum, the legal limits of what it is allowed to loan to customers, and is having absolutely zero problem. And I genuinely think Wall Street doesn't even notice. Like, its price has been going up a little bit here. I mean, this is healthy. This is definitely healthy. But even now, Wall Street clearly hasn't paid enough attention to understand how efficient this bank actually is. This is not your average regional bank stock, guys. However, very similar to Rolls-Royce, as the overall market has had its demand kind of jogging in place, a lot of large institutional buyers seem to be actively reevaluating their strategies for the final quarter of the year. Well, I mean, just look at this textbook natural reaction. It's actually a bit of a Wyckoff pullback in the sense that it's actually undercutting the previous low. But look at how low the volume is. Look at how the stock is absolutely respecting the 50 SMA. What's going on here is simply that Bankwell is basically still ignored by the market. Momentum guys haven't even really rushed in to start participating yet, despite what is clear momentum. And so the price fell below here purely out of necessity. It needed liquidity. The only available liquidity was people that feel comfortable selling at around August, September prices. Attention on this stock is still minimal, and that's always a bit of a sensitive position to put your money in. However, this is the true character of value stocks in unloved industries like the financial services industry. What we need to remember as long-term analysts is that the industries that are loved change dramatically from cycle to cycle, and absolutely none of us know what those preferences are going to be. But clearly right now, the financial industry is a very ignored industry by much of Wall Street. If you had these levels of capital efficiency in any other industry, I mean, even if you had it in the consumer cyclical space, then Bankwell would be talked about as one of the hottest growth stocks. Instead, Bankwell is growing faster than pretty much anyone would guess. Again, check out that deep dive video to see the specifics. And despite a 6-month beautiful uptrend, momentum guys are like, meh, we're not really sure if we want to defend this uptrend or not. Well, each one of us has to decide how much conviction we actually have and balance that with the fact that we can't move markets on our own. So even with a lot of conviction, this is looking not necessarily dicey, not necessarily like the uptrend is gone, but like it's definitely going to require some patience from us and vigilance. Our standards could be to wait for a stronger, more clear uptrend than this one. Ideally, one that is having its volume increase a lot faster than this. Well, thank you guys. If you made it to the end, please consider subscribing and liking the video. Even better, if you have some hype left and want to throw that hype my way, it encourages me to keep being transparent, to keep opening up and communicating with you guys. You can probably tell I'm more on the introverted side. That's why I like to journal, and honestly, it's incredible to be able to work through my analyses and the fundamentals in the deep dive videos, but the technicals in these journal videos. You guys are making me a better investor with every comment and every like. I hope you can feel that I'm doing the same for you. Bye, Sage Seeds.